Well, good evening, everyone. It's Tuesday, March 3rd, back from vacation. It's like 10 o'clock in the evening. Bitcoin's trading right around 68,000, which is more or less where it was before I left for vacation. And, I heard there's been a little volatility, but, whatever. Anyway, all joking aside, there are a couple of stories that are worth talking about today. One of them is Ray Dalio, the head of Bridgewater Research, very influential, author of many books in the industry and someone who has talked at least a little bit about Bitcoin being positively and understands the entire notion of the debasement trade, coming out with a series of posts this morning, an interview this morning that completely misses the boat. Ray said that Bitcoin, because it doesn't have privacy, that everything is exposed on its transaction layer, central banks are not going to want to buy Bitcoin because of that. Quantum computing is a risk. And he has other arguments about you don't know who owns it. Now, other than the fact that not saying that you don't know who owns it and that Bitcoin doesn't have privacy in the same breath contradicts each other, which kind of tells me that I'd be a little bit worried about his mental acuity. The simple fact is he's sort of right, but misses the point. There is a reason that central banks might not want to own Bitcoin. In fact, the key central banks, the large ones who get by lots of arm waving to try to keep their currency strong, are the ones that are least likely to want to own Bitcoin in the beginning. Why? Well, because Bitcoin holdings cannot be faked. You can't block an audit of what's available in Bitcoin. You can't have counterfeit Bitcoin. In other words, the fact that we, as an example, in the United States for the Treasury, have not audited Fort Knox ever, despite campaign promises to do so, will be impossible with a Bitcoin strategic reserve because it would be known and people will be able to see it and audit it and touch and feel it. What central banks, now, not really the biggest ones, not certainly in the United States doesn't care, but other central banks don't want people to know what they own. I don't think the CCP wants people to know what the Chinese central bank owns, as opposed to the Treasury of China, as opposed to foreign country companies. Their companies there. They want to keep opacity. Well, Bitcoin is terrible for opacity. And if your central bank wants to protect their fiat currency, they want to be able to hide what's going on. Bitcoin is therefore very problematic for them. So to that extent, Ray is right. That said, those countries whose central banks want to establish proof that their currency is backed, they will find the fact that people would know what's there as a particularly useful characteristic. So watch the space. Those central banks that are buying gold these days are probably the first ones to look to be buying Bitcoin into the future. So that's the main point. When he talks about quantum computing, that's another one that's complete nonsense. Now, it's not nonsense that there's a risk, because there is a risk. I mean, there's no doubt about it. Bitcoin blockchain can be updated. Wallets, in fact, most people can get by on wallets where you can just change your public key, and therefore breaking the public to private key encryption becomes impossible if people can even see the key if it gets changed immediately. But the highest percentage that I've seen of old wallets of Bitcoin that has not moved is 33% of its float. And that's on the high side. Most actually have it at much lower than that, half that, 10 or 15% of Bitcoin might be at risk. But think about it this way. The statement from Ray Dalio is absurd. Why is it absurd? Well, it's absurd because he knows better. The Mag 7, which are all larger in market cap than Bitcoin, all of them at lots of points in their history had more than 33% of their float released by insiders to trade on the market. Yet, did they crater? Of course not. They're the Mag 7. Very, very large companies often have secondary offerings where significant pieces of float come to the market without destroying the company. And the notion that people would spend billions of dollars potentially, and certainly hundreds of millions, to build the quantum computer that can break Bitcoin cryptography, why would they want to dump the price? There's no point in it. You can't make money doing that. I mean, possibly, I guess the argument would be that people would build the quantum computer to break the price because they're going to short Bitcoin on the perpetual swaps market. Maybe. But then they sell it and it'll bounce back and they would know it, so they would buy it on the long side. Either way, other than sloppy manipulative trading, there's no incentive to do it. And it has been done in a way that if you acquire the assets, it's not even clear that it would be illegally acquired. So there would be no need to do it. They would have acquired the asset, which of course they want to keep its value. So therefore, Bitcoin is not an existential threat. Now, Is it potentially an issue at some point? Yeah, of course, an issue. Is the Bitcoin community adapting? Of course they are. You have the biggest holders on the planet, MicroStrategy being one, Coinbase as a custodian being another, funding research efforts to make sure that it can be adapted. Now, that's more than a lot of other places that have bigger security risks. But the fact that institutions aren't going there from Dalio, that's just wrong. Now, there was a third story today in terms of FUD that I just don't really understand. The idea was that Marathon Holdings, because they updated their SEC documentation to give them the flexibility to sell Bitcoin that has been previously kept in their treasury, people said, oh, that means they're going to dump Bitcoin. Well, of course, that's silly. First of all, they're still mining Bitcoin, so they have zero incentive to tank the price. Secondly, they have a clear expectation of what that price would be worth, and they're already selling stuff that they mine. But thirdly, if you look at the dynamics of their stock valuation, it makes perfect sense. Why? Because their stock market cap is actually lower than their Bitcoin holdings. Now, sure, there's debt involved, et cetera, but the enterprise value of an AI data center provider, which is what they're pivoting towards, is not going to be zero. Now, if it turns out that they're continually valued at zero, then sure, allowing the ability to sell, maybe in an M&A transaction, their Bitcoin holdings is a very logical thing to do to increase shareholder value. But none of that involves tanking Bitcoin or dumping it onto the market, which is, of course, what the doomsayer was saying. So when all of this was happening, Bitcoin was trading around 66,000 among Iran war fears. Of course, I just told you we're back at 68,000 again. Why is all this happening? Because as I've been saying repeatedly over the last 2 weeks, when we went below 60,000, that crescendo of selling, barring any really bad news that is seriously going to impact Bitcoin, is probably going to hold as a bottom. And we've seen all the news out, and the selling simply just isn't there. So don't expect that to be a change anytime soon. Obviously, with what's going on in Iran, there's macro factors. We'll talk about that maybe tomorrow. But for today, understand that the bull case for Bitcoin is still intact, that Ray Dalio, if anything, is really giving you bullish reasons, because if central banks are afraid of Bitcoin, that tells you that those who are buying it to measure fiscal, profligacy, have a very good idea on their shoulder, in their head. So that's all for today. I'm glad to be back, and we will talk again tomorrow.